Now, tonight's webinar is on fundamental analysis. And if you have attended some of these webinars before, the Tuesdays ones, I tend to look at your charts. And on Thursdays, I make it all about an educational experience. So before we get sort of started, if you haven't been to one of these sessions before, my name is Alistair Schultz. I am the Chief Market Analyst for Acysecurities. And I bring with me a little over 15 years of trading experience, including having spent time on the floors of New York trading there on Wall Street, and a variety of other investment funds and brokers along the way as well. Now, to sort of get us kicked off and get the main things out of the way, I have a risk disclosure warning for you all. This is just a standard policy sort of thing you have to go through, but if you want to get a better copy of it to have a look, it is given to you as a PDS when you do sign up with us. Now, this is all about foreign exchange, derivatives, and a variety of other investment things, and it needs to be considered about your own investment objectives, your own risk tolerance levels, and what your trading experience is like, because there is a chance that you can lose more money than you invest. So, do not invest the money that you can't afford to lose. And of course, if you need more financial advice, then consider your objectives around them and seek it as well. So to get right into it, tonight's webinar is on fundamental analysis. Now, fundamental analysis is a qualitative process that involves examining relevant factors and forming an opinion about the future direction of the market. The factors that might be considered depending on the instrument of interest can include macroeconomic data, industry-specific data, public opinion, economic opinion. There's really a variety of different indicators that we can really look at. Now, as opposed to looking at the idea of an indicator like you would with a technical piece of equipment or technical analysis, we are now instead considering it in a much bigger perspective. So fundamental analysis usually focuses on that big picture, allowing its proponents to sort of take long-term positions in line with the fundamentals of the instrument. Traders using this approach will have a high degree of confidence that their position is safe and likely to profit, as opposed to some of the worry that you get when you do have technical analytics and or in other variances of fundamental analysis. So the other type of fundamental analysis you can come across is what we call sentiment. And sentiment traders still monitor the fundamentals of the market, but they also focus on the shorter term changes in market emotion, if you will. So sentiment is affected by a single piece of information that's become available to the market and creates short-term adjustments in price. This is generally achieved by sort of monitoring those data releases, news discussions, market announcements, and these factors can have a short-term impact on the price of the instrument and provide opportunistic or places for profit. So in both cases, most of the trader's time will be spent assessing, analyzing information from a variety of different sources. Only a small amount of time is really spent on the examining side and analyzing side of charts themselves. For the sake of discussion and for you guys to sort of consider and think about, let's consider how using just a single piece of information from fundamental analysis might help a trading with use of a currency pair such as the euro dollar. When using fundamentals to analyze and trade a currency pair, it's necessary to analyze both parts of this pair. So in the example of the euro dollar, you will need to analyze and form an opinion about the changing value of the euro and the US dollar separately. After the GFC, reserve banks around the world became concerned with ensuring there was adequate money supply in the general market. This was achieved by using a strategy known as quantitative easing. And to sort of fill your minds in about what quantitative easing is, it's rather an unconventional monetary policy in which a central bank will purchase usually government securities or government bonds and notes and a variety of other securities from the market to lower interest rates and increase the money supply. Quantitative easing increases the money supply by flooding the financial institutions with capital in an effort to promote increased lending and liquidity. It is often considered when short-term interest rates are at or approaching the zero mark. And it does involve the printing of new banknotes in some circumstances. Now, after that GFC, the reserve banks around the world became concerned with ensuring that there was adequate supply in the general market. And so obviously they've used quantitative easing to try and fix that problem. In the example of euro dollar, I'm going to give you a couple of charts to sort of have a look, and we can see how quantitative easing has had an effect on the euro dollar over time. So I'll just switch to the next chart for you to have a look at now. And I've marked it all out. I'm going to explain each bit as we go through on this one. So the euro dollar price, the chart shows the euro dollar price from the period of sort of 2008 to the beginning of 2017. I've highlighted the areas where the US Federal Reserve announced that it would be initiating or extending quantitative easing, or also known as QE. And this is represented by the blue dotted lines. After each of the US Federal Reserve announcements, the US dollar was devalued. When examining it on a euro dollar chart, this appears as an increase of the price of the pair, which is what we would usually expect. Areas where I've got the European Central Bank announced that they'd be either initiating or extending the same quantitative easing sort of principles are seen by the red solid lines. After each of these ECB announcements, the euro devalued. This is again evident on the chart as price falls following the announcement. So the size of the rise or fall in price and the length of time that it lasts depends on the interplay between the value of the euro and the US dollar. The chart that I've got here for you illustrates how the valuations at any given time will have been affected by the relevant QE announcement. But there are a range of other fundamental factors that contribute to price. It is beyond the scope of what I can teach you to describe sort of all those factors in detail, but the list will generally include a number of different elements. Interest rates, reserve banks, varying interest rates to impact currency values. So, for example, if the interest rate is lowered, it will be less attractive for other corporations and governments to park their funds in that country. With lower interest rates, this devalues the country and the currency. So observe that during the period shown on the chart that I've got here in front of you, both the US Federal Reserve and the ECB lowered their interest rates to record lows. And this has had an impact on price during the same period. So the next one that we can sort of start to consider would be economic indicators. Each month, a variety of different economic data is published, which purports to measure the activity and health of specific area in the economy. The data can include interest rate announcements, inflation rates, employment levels, unemployment levels, new building rates, gross domestic product, growth, a variety of other ones that go on. Even housing market will play in this. Reserve banks tend to assess all this data and use it to sort of make their own decisions on what they're going to do with the interest rate. Fundamental traders then use that data to assist in their analysis as to whether or not the economy and therefore the currency is strengthening or weakening. So in essence, that sort of description briefly shows how fundamental analysis of a currency pair can affect a trader's perception on the value of a currency. The same principles can be applied to analyzing almost any instrument that you might trade. So if you intend to trade using fundamental analysis, it will be necessary for you all to sort of learn about the instrument that you are working with and its specific idiosyncrasies. So to give you a bit of an example and how you might add to that sort of list, heating oils and futures contracts will seasonally increase as winter approaches. So the main reason or the fundamental aspect that you would pick on looking at oil and heating oils out of the US are because we're seeing more likely of colder weather and an increase of use or demand in the oil that is used for heating. Sugar prices, they tend to rise in if growing seasons are cut short or impaired for a variety of reasons. So that may simply incorporate the weather and having a bad return on crops. Crude oil prices, they tend to fall when production increases because new manufacturers are either in the market or what we're having right now occur, where we're having an agreement to sort of cut production and or increase production like we saw a couple of weeks ago. So we're hoping that we're going to see a price rise in oil, but there is a little bit of a difference that's changed from what we have seen in the past when it comes to oil at the moment, because of COVID-19 and because of the way that the world is not really using any oil or fossil fuel sort of stuff. We're seeing that the drop in the demand is about 20 million barrels per day, but the cut that's only just been done is about 9.7 million barrels per day. So we can obviously see there is a deficit between the demand and the amount of oil that is there, and that it needs to really go back into balance. So they need to cut further before they're going to start stabilizing oil prices to start, and then they need to then cut further again to make those rates actually start to go up again. Now, when we think about the trading sentiment behind this sort of stuff, sentiment is that shorter term approach in the fundamental analysis. Traders can really be fickle. And so, for example, in a market falling with the fundamentals, traders can start to buy based on seemingly positive news, just like we're seeing across the board right now. So even though that positive news has come out, if the news is not genuinely significant, it will likely be short-lived. Then the buyers will leave the market and allow the market to start falling again with the fundamentals. Similarly, in a falling market, there may be some negative news that drives price even lower more quickly. The drive will be short-lived. However, eventually a pause or even a correction back to the original path can resume in that fundamental movement, because the news hasn't been enough to actually change the overarching big idea. So keep in mind and keep this in the back of your head that the fundamental side is the big idea, whilst the sentiment is the immediate emotional response. The news that affects sentiment can be related to the release of economic data, formal announcements from reserve banks, government officials, media commentary, and so on. There's quite a lot of different things that you can look at. The sentiment trader will be closely monitoring what we consider the wire, our news sources. So for data releases, he'll be looking at announcements and speeches, media reports as new information becomes available, and a trade can be entered later and closed at short notice quite easily. The next chart I'm going to show you tonight gives you the impact of short-term sentiment on price, but in each case, the move was not sustained and returned to its original trend. So in this New Zealand dollar chart, we can see that price was moving in a gentle downtrend when it was interrupted by the release of milk price data. Now, the reason this has happened is milk products are New Zealand's major export, and they make up about 14% of the GDP for dairy produce. So when we see that an important piece of data around milk for that country, it will, or around milk prices in general, the country's economy starts to suffer from it. So with that data release, we've seen price move rapidly up, and then it continues up for about 24 hours before resuming back to the original downtrend, albeit from a higher level. So the milk product price change data is released roughly every 2 weeks. A sentiment trader could theoretically use the release of that data to make a prediction about the market's movement for a period and how to profit from that movement each time. So if you could consider what might actually be going on with milk prices and the rest of the world, and what the export nature of the dairy products that are coming out of New Zealand, you could easily start looking around and put that big picture in perspective and start considering what other countries might need milk that year. Is there going to be an increased supply? Have we had a year where there has been bad growth for most of the exporters or the major trading partners of New Zealand? In which case, you can start to make an assumption or a theory about what we might be thinking in terms of where price might go in those dairy prices and what that means for the economy as a whole. Now, the next chart we're looking at tonight is on the Aussie dollar. And this chart is from the January 17, and it goes for a little while, but to the left of it, it's evident that price has been trending up. And I've marked that all out for you. But ultimately, it starts to fail. I'm not suggesting that there's a reason for the fall. It could be as simple as exhaustion of the market or a negative sentiment caused by traders anticipating sort of negative Australian employment data in the subsequent hours. However, when the data release did occur, it was unexpectedly positive in this instance, which has triggered a bullish move. And it's been, continued to hold that sustain for another couple of days. So we've seen that even though that's occurred, the following days have effectively reinstated that original uptrend after it had already started changing away from it. A sentiment trader would have observed that the falling price and possibly have had an understanding of what was driving it. In either case, the release of an Australian data would have been something to watch, but the release of unexpected positive data challenged the momentum of that falling price that was already in place. So in the context of generally rising price, expecting price to rise again would have been a reasonable expectation, but this would allow the sentiment trader to sort of buy into the market at a much earlier point in time. Now, I've got one more chart for you to have a look at for right now, and this is on the pound yen. And in this chart, it's showing that price has been consolidated to start off with, and then it shows only a very slight general increase until some unexpected negative retail figures were actually published. So that's where that dotted blue line is, and I do have them sort of marked down the chart for you if you want to read along while I'm talking. The decrease had sort of already begun, but once, because there was obviously a lead up, people had already expected that there were going to be negative data figures coming out. So we saw a build up a little bit before, what we consider to be called pricing in. And you quite often see that with non-farm payroll. But in this instance, the decrease had already begun. Then we saw the news release occur and price fell much quicker, over 300 pips in the space of a couple of hours. So on this occasion, once the correction occurred, price then fell back into that consolidated pattern. So it was moving in almost the same sort of range. A sentiment trader would have likely been aware of the news was about to be published and that emotional sort of side of things. So they probably could have gotten in on the fall before the results were actually released. And this can usually be caused by traders sort of anticipating the news. So sometimes when you see the market move before the news has actually come out, it's because we've done a little bit of research to have a look into why or what we think might be estimations for a change in data. Now, you see this quite often when you look at bank rate decisions. Now, there's actually betting rings where you can bet on what you think the rate is likely to be doing at the next monetary policy meeting for reserve banks or central banks across the globe. And quite often, they will do a series of interviews or questions and surveys with a variety of different economists, and they'll start building a picture, especially if you look at places like Bloomberg News. And they will give you an estimate of what they think a rate decision is going to be likely to occur and what that amount might be. And they'll give it a rating of, between obviously 0 and 100%. And it might be there is a 75% chance of a rate cut occurring. We do see this quite regularly. And especially in the last couple of months with all COVID-19, that has been something that has been readily going on quite all the time. Like you can actually keep an eye on what's happening very easily. Now, to give you guys a little bit of the next things, I'm sure many of you are sort of wondering, okay, well, if I want to do some fundamental analysis, where can I really start? It does feel like a bit of a maze. There are a lot of different elements to consider. There are a lot of different ways to do it, whether you're going to be just purely fundamentals or if you're going to incorporate sentiment and a variety of other functions, depending on what market you're looking at. So the first thing to sort of start off with is you need to know your markets. Currencies always have two sides to really consider. If you, like we were saying before with the euro dollar, you need to consider the euro and the USD and what is going on within those economies. In another example would be the Australian dollar. You need to know what's happening in Australia, not just with the little stuff, but all the bigger stuff as well. And you also need to know what's happening in the US. And then you need to think of it as a battle between both economies' currencies and pick out which one is either weakening or improving its strength along the way. The euro is probably the most difficult currency to sort of consider because of the highly politicized nature of it. You have so many countries involved and so many different politicians and so many different levels of politics within each country, all trying to fit under one banner of the Eurozone. So things that you might not expect to sort of make as much news, it makes a little bit more. We tend to find at this point in time that German news is the sort of king. Most of the world sort of keeps an eye on what goes on there. And we do tend to hear obviously a fair bit from the EU meetings themselves and the ECB. But regardless, they in such a situation, they have to adapt to each other country's needs that you never know what's going to be the next thing to come along. Now, having a think about that, and when I was just saying before about needing to understand both sides of the coin here, you need to understand what's in the economy. So you need to know what's in the GDP, what sectors is it made up of, or the industries, and which of them actually contributes the most towards GDP. So if we think about New Zealand, then 14% of their GDP is made up of dairy prices and dairy products. So we need to keep an eye on what's going on there. And I would usually pick between the top 3 to 5 industries or sectors that make up that GDP, and I would get very intimate with them. The next part is to think about who are the main trading partners. And if you can identify who roughly the top 3 or 5 are pretty quickly and easily, it makes it easier to know what other economies you might need to consider. So let's say, for example, we're thinking about the Australian dollar, and we're wanting to place a position on that, but we're not quite sure which way we're going to go. We know we are going to have, just for argument's sake, we're going to have an increase in exports for building materials and steel and coal and all those sort of things. The first thing most of us would think of is that China would be one of the top trading partners. Japan would be next, probably the UK and America. And then we need to identify what those countries are actually looking for to get trade out of us. And that might incorporate looking at what they are really importing, how much of it they import, and what it makes up for on our trade balance. So for Australia, China has in the past, I'm not so sure about right this very second, but in the past been responsible for about 32% of our exports and about 15% of all of our imports. So it's safe to say that if we have an economic downturn in China, then that is going to affect the overall GDP of Australia. And therefore, it is going to weaken the Australian currency. And then when we compare that to the US, then it is likely going to be much further devaluation. So you can see where we're starting to go with these sort of things. Now, what might be some of the other things that we would consider in that list? Well, we'd want to know about the inflation. And most countries would have a 2% target, or trying to maintain a 2% target at the moment. We are not in the state of hyperinflation, but we are on the verge of having a variety of different problems with inflation right about now. So we need to keep a very close eye on what's happening there. We need to think about the politics and who might be in charge and what they're really doing to try and build and help the economy overall. The next one is to sort of know who the central bank is and what their monetary policy is, and generally who the guys running it are. So in Australia, we have Governor Lowe, or Philip Lowe, and he is running the Reserve Bank of Australia. Now, if we think about the US, we have the Federal Reserve Bank, and it is run by Jerome Powell. And we tend to pay attention to what those guys say. And every monetary policy report, statement report, or rate change or anything along those lines, these guys will generally give a rate statement that is coming up either during, immediately, and right after what they're thinking about and what their expectations are for the economy. So those are little things that we can sort of keep an eye on and have a look at it. Once we've done all that, it's about building a picture in our head. We're trying to paint a picture of what we think that economy looks at. And in some instances, I mean, I know I certainly do it. It doesn't work for everyone, but I certainly actually close my eyes and then try and picture and visualize it in my mind as to what that economy looks like right now, why it's having the effects that it is having, and how come a variety of other factors might be imprinting on the actual price itself of the currency. Or in other instances, you can even use these techniques for stocks. I've done so for years, except the difference between looking at an entire economy and a stock is that they're obviously much different scales. However, if you try and apply the principles, and if you have traded with stocks before, this might be an easy transference for you, is that instead of looking at a country as a country and the currency as money, we should start thinking about the currency being a stock and the country itself being a big business. Because at the end of the day, that's really all it is. So we can have a look and get more in depth about it and think about when we purchase into currencies that we're actually purchasing a part of that entire country or that entire business, much like we do with a stock. Now, the only real major differences between the two are that you tend to get a lot more data to consider when it is in currencies than what you do in stocks. And generally, when you do get stuff from stocks, it's all neatly wrapped in one financial statement that would cover the entire year at the end of the financial year. It could be a 400-page document. However, when it comes to the data that we get out of Australia, you've got multiple different sources, and other economies are the same. You might have the Australian Bureau of Labour Statistics or the ABS. Then you get something from the RBA. Then you get something from some other politician. And so it's all about putting all of that information together and formulating how we think that economy is going to fare in the coming months, and then how it's going to fare against another economy as well. Naturally, the stock side allows us, we can do the exact same thing. Instead of just thinking about an individual stock, we have to start thinking about the whole industry of that stock. Does that company have a major competitor? Does that company consider have new R&D projects or new building things? Are they putting in more infrastructure, much like we would look at in a country? So you can see that there are a number of different ways to sort of start thinking about it. Then we need to wonder if we're going to be looking at the sentiment at the short term, or are we looking at a much longer term picture here? Now, the next things to sort of you might be asking is, where would we find some of this information? Well, naturally, an economic calendar, which is the second lot of data there, is going to be the first place you're going to look every day. You're going to have a look, you're going to see, you're going to keep an eye on what's going on. You're going to want to have a summary in your head of knowing on what day, what news is coming out. And you will tend to go through and find the stuff that you think is going to have a much higher impact than normal. The next one to sort of consider about information and where to get it from is going to be on the left of the screen here. Now, this is the minutes of the monetary policy meeting of the Reserve Bank. Now, that will usually be about a 30 or 40-page document. Sometimes they're much larger depending on what sort of crisis we're in at the given time. But they will generally give you a variety of different information on what the board members within that meeting and that are on the chair are thinking about in general, about the economy, what they think that they can do with monetary policy, whether they're going to use quantitative easing, whether they're going to lower rates. And it gives you a nice little wrapped up bow, although it sucks to read purely because they can be quite boring. But nonetheless, you sort of skim through the bits and look for what we can. Now, the interesting factor that we do find about getting central bank reports is that they are quite often almost identical every month. And it really only takes one sentence to be changed, and we will see a big move in price because it might be hawkish or it might be dovish. And that little sentence is quite often prevalent in US Federal Reserve bank statements and quite often in our own Australian ones. So whenever we sort of see that sort of information coming out, we sort of have to take note of it, and we can try and read it as quickly as possible. Sometimes I prefer to actually listen to the politician or the chair member of the bank speak directly, and you can sort of listen in on them live, and it might give you a bit more information from a few different sources, obviously being audio and visual, rather than just having to read and try and find that one sentence. They'll quite often say it in the statement. The next one is to sort of consider what other people think. Now, I've got an example. I'm not having a self-righteous plug at myself, but I've got the third one down on this list is a blog post that I've done. But there are plenty more other people out there who write blogs or who write what they're thinking about an economy. And it's important to sort of think about what others are thinking in the scheme of things to see if you are fitting into the right spectrum. And there will always be two sides to this. And it is important not to let yourself get your judgment clouded, especially if you have thoughts on a particular trade coming up, then you do that so scarcely. But if you don't really have an idea in your mind, or perhaps you're still in that learning phase, it's important to sort of have a read of these sort of articles. Now, I still do this quite regularly and routinely just to see what other people are thinking. And if I'm starting to look into a new market or a new stock or something along those lines, you'll quite often find a news article, a blog post, or perhaps it's a TV, a news report on a particular thing. And we can sort of get a little bit of insight out of that sometimes. Sometimes it's not all that useful. Sometimes they can be quite difficult to translate because of all the economic jargon. But nonetheless, you will be able to find them and use them. The last one is actually to start thinking about the data window. Now, on the far right-hand side, I have an example of a data window that's available through ACY. My actual preference is to use just a chart of prices. And I have mine set up to watch for certain things. And if I see a scale of different stocks, or I see a number of the things in my watch list going in one or two different directions, then that will indicate to me to sort of go and have a look and see if there's something broader happening in that industry rather than just within that company. So it's not something you have all the time, but it is just something that you keep an eye on from time to time. Now, when it comes to sort of that's the end of this sort of chapter of thinking about fundamental analysis, I hope this has sort of helped you all. I do have a couple of things I would like you all to sort of consider for further exploration on what might be happening in general with the market and how you can go about thinking about different instruments and how you can think about fundamental analysis and obviously sentiment as well. Now, I tend to consider myself to be what I call a rational trader, so I use both technical analysis and fundamental analysis. There is no right or wrong way, and if you find a way that works for you, then that's all that's important. So try not to replicate what someone else does, but try and invent your own that works really, really well for how you are able to interpret the charts. So a couple of ways for you to sort of start considering some further exploration on what you might consider for fundamental and technical analysis will be to sort of select several different instruments or charts to work with. So for example, you might look at the euro, dollar, and oil, and then spend some time researching and thinking about what factors might influence the value of these instruments. If you can then identify some significant fundamental events that might have affected price, and then check the price charts at these times that you've found the event to see if there was actually an effect on what has happened in price, much like I showed you in that very first euro dollar chart where I highlighted where quantitative easing happened. If there was an effect, have a think about how it happened. Did it happen the way that you predicted it would? Research the ideas of what quantitative easing is and ensure that you understand them, because right now we are having a lot of quantitative easing going on around the globe. It has been a controversial thing to do, and for the very first time Australia has joined that QE sort of stimulus. And the other part would be to sort of have a look at why people think it was controversial. It would be useful for you guys to make your own assumptions rather than listen to mine in this instance, I believe. Now, the other one would be, you could start off with, if you were interested in the dairy milk prices and what I said about the New Zealand dollar, pull up a New Zealand dollar chart, cross-reference it with the release of milk supply and milk price data. And you can find this via a variety of ways. Plenty of news sources like Forex Factory or even our own calendar will reference that sort of information for you. And it can sort of form the basis of where you might start considering some sentiment trades on a short-term basis. It is one that is easy to get started with purely because we know what's causing the prices the change in fluctuation. So we're just really looking to see what's actually happening with milk itself. The next one to sort of consider would be to have a look for non-farm payroll. It happens once a month. It's usually the first Friday of every month, and it's for the United States. But have a cross-reference of the news releases that come out around the time of NFP and see if it's positive or negative. And you could use a couple of different charts to do this on. You could use the euro dollar, the pound dollar, or anything in between that's got a USD background in it. Have a look and see if there was a shift in price. At times of a data release, you tend to find that will happen. Did the shift correspond with what you were expecting from the data release? And was the job earnings good or bad? Has it weakened the economy? So start thinking about those things at a broader scale and see if that sort of helps you get anywhere. Of course, I'll be around, so you are welcome to get in contact with me at any stage. Before I start finishing up for the night, has anyone got any questions? If you do, feel free to put them in the Zoom webinar chat box, and or the question and answers box. I have them both open at the moment. Otherwise, we will start moving on to the next bits that I will just be finishing off really for the evening. I'll give you all about a minute to sort of have a think if you do have any questions, and we'll happily answer any one of them. Okie dokie. Either I'm a very astute teacher or some of you didn't understand what I said about questions. I'm hoping it's the former. But anyway, we'll move on from that, and I'll just wrap it up. Make sure it is Thursday night. It is starting to get late. I'll let you all go and have dinner. So just to finish up, I have got a few slides to show you. If you have registered for the webinar tonight, and you would obviously have been able to find how to get in. If you're interested in continuing with these, I'm doing them every Tuesday and every Thursday. Tuesday, I encourage people to bring their own charts and to send me a chart of, say, the whatever they are looking on. It might be that you have a trade idea. It might be that you have an idea about what's going on in the market and you just want to get a second set of eyes on it. Then feel free to do that. It's simply via the same chat and question and answer box. You can send me a message that basically says, I would like you to have a look at the euro dollar, for example, and I'll happily do it for you. Now, the webinars and the times and the schedules are all shown on the ACY Cloud and on the website itself. So feel free to register for any one of them. I'm not too fussy on that. The next one is that if you are interested in some of the news or you want to know what's going on and you want to get an analyst's opinion, feel free to check out some of my blogs and the videos. I do a few tutorials. I do a lot of market updates just to give you a recap on what's happened in the night before or sometimes the day ahead and some of that high impact news that you might need to have a look at. The website is on the bottom of that slide that I've got up there now. So feel free to have a look at any of those at any time you like. The next one is obviously where you can have a look at if you don't go through the ACY Cloud for the webinars, then you can certainly go through the link just down on the bottom of this page I've got here, and you'll see this slide tile sort of background setup for looking at what the next webinars is. There's always 6, so it will always keep updating. And I do tend to repeat the Thursday ones a bit. The Tuesday ones are much more free flow. So we talk about anything. I answer a lot of questions usually, so feel free to pop into any of them. Now, the last one is if you have any questions about tonight, some of the other stuff, perhaps it's some of my content, feel free to shoot me an email at talktoal@acy.com. I've got it up on the screen for you there now. And I do answer the questions as often as I can. In some instances, if I get a variety of questions or numbers or people want me to review a particular topic, then I generally will make a video about it and then send you all a link pretty quickly after. So feel free to get in touch with me. I'm around to hear your thoughts. Anyways, I'd like you all to have a good night, and I hope you are all staying safe with COVID-19. I look forward to seeing you at the next webinar, and I hope you all stay well and healthy. Have a good evening.